right, welcome to Common Sense Investing. My name is Cameron. Today I'm here to talk to you about microcap stocks. Barely made it to my own live stream again. It's amazing how many times that happens. You know, I have these large presentations built and I spend all this time putting them together and I schedule these live streams, and you would be shocked at how many times I'm just sitting there doing something and I'm like, you know, shit, I'm 10 minutes until I go live. I just about forgot about it. So thank you for showing up, because if you showed up, you didn't forget about it, while I just about did. As usual, I have a presentation for you. What's the title of this one? It's something around the lines of U.S. microcap stocks, plenty of fish in the sea, or something like that. That is what I am going to talk about today. Thank you. I appreciate it. Listening to me is, it's interesting. I get tired of my own voice, because when you record videos like I do on YouTube, it's not just something that you record and then you just publish to YouTube. Usually I record about 25 to 30 minutes on a stock, and then I just cut and cut and cut and cut until I get the best 10 minutes. So lots of times I could talk for days about a company or a stock that I've researched, right? But I always try to cut my YouTube videos down to 10 minutes or less so people don't get bored, as well as I feel like 10 minutes or less really gives you a good idea of whether or not you want to continue your research on a stock. And if I go much longer than that, it's just wasting your time. But the painful thing for me when I do videos on YouTube and I do that much editing a video down from 30 minutes to 10 minutes, is I have to listen to my own damn voice for so long. I'm talking for a 10-minute video, I probably listen to myself for 5 or 6 hours. I absolutely drive myself nuts. So I appreciate it that you're in here listening to me. Thank you. I appreciate every subscriber, everybody that watches my videos, everybody that subscribes to my Patreon or my Substack. It is really humbling. I thank you very much. As always, I've got a presentation to go through. At the end of my presentation, I will have a Q&A period. We could talk about whatever stocks you want to talk about this week. I have one of these live streams every week. And the other thing that I'm thankful for today is that Small Cap Discoveries has finally released their lineup for the attending companies in their Small Cap Discoveries conference coming up in Vancouver here. So that is September 29th and 30th. Yes, that says join me in Vancouver. I am going in person. So I will be there in person in Vancouver. I am also going to record some video. I don't think I'm going to release it at the time of the event. I'm going to record some video. I will release it later. And the intention is that my channel, Common Sense Investing, really wants to attract the new microcap investors and then build you up into something that this is what you want to do. You're making money in microcaps. I believe it's the best place to be for your average retail investor. I think microcap stocks is the best place to make money. So really the goal of my channel was to educate, right? Attract new investors and educate them so you stick around. And that's because back during COVID, when the stock market was going up, I saw so many new investors come down into the microcap space, invest all their money into some story stock that wasn't producing revenue, and they lost it all and then they left. I do not want to see that. I want to see more great microcap investors. So my intention with my video series here that I will be doing through Small Cap Discoveries is not necessarily focusing on any one specific stock, but I do want to record some video, and then I will release it in a basically a little mini series showing you why you should consider going to some of these events, right? Small Cap Discoveries has their conference in Vancouver this fall. Planet Microcap has their conference here October 21st in Toronto. Planet Microcap has another one in Vegas in the spring. Why get off your ass? Why get into a plane? Why fly to a different city just to go to one of these conferences? That's the intention of what I want to do with some of the video that I am going to record. And yeah, I did make it in time. Thank you very much. Yeah, it's barely. So I can't wait to go to the Small Cap Discoveries conference here in person, September 29th to 30th, and then you will see some videos coming from me kind of showing what to expect when you go to one of these conferences, right? So that is the plan. Could you spend a little bit of time talking about the difference between signing up for Discord membership versus the non-Discord? It sounds like the Discord offers a lot more discussion. Yeah, I could talk about that in a second. The next thing that I'll say here is that Canadian value investors beat me to it. So Canadian value investors, I typically do a cheat sheet on all the stocks that are attending each conference, but Small Cap Discoveries just released this a couple days ago. I haven't had time to put a cheat sheet together for all the stocks that are attending. And then I see that Canadian Value Investors right here on X and on Substack has already released a cheat sheet on all the companies attending. So if you give me 5 minutes until after this video is done filming and check down below in the pinned comment, I will have a link to this Substack article from Canadian Value Investors introducing all of the different companies. Now, what does this allow me to do? Well, I mean, this is the cheat sheet provided by Canadian Value Investors. I like having a little bit of color. I like having some of my opinions. So if Canadian Value Investors does not mind, I'm probably going to steal some of the pictures here, put it in my own Substack article, referencing his Substack article, and just provide a little bit more color. Questions that maybe I want to ask these companies before I invest my hard-earned money into them. So I still plan on putting out some kind of article talking about the stocks that will be attending Planet Microcap. Now, the question here about the difference between the Discord and the non-Discord. So basically, if you sign up to my Substack, what you get is all of my Substack articles, and you get the option to join my Discord, but you don't have to. So basically what I do is my Discord is essentially my investing journal. I just write everything down there. Do I like this? Here's my research on a stock. Do I like the stock? Do I not like the stock? Why not? Every 3 months, I'll go through the earnings. What do I think of earnings? You know, is this improving my stance on this company or not? Basically, my Discord is where I find, research, introduce, make my opinions on a company, and determine whether or not I like it. My Substack here is where I put all of that information in a clear, concise, like investment thesis. So recently I've had one for, well, I can't say which company because it's for my paying customers only, but I just released one, for example, on Sabio Holdings. And you can go read that Substack, and instead of going to the Discord, it's basically just got an article with all my research and all my information in that one article, basically my investing pitch. So the Substack is for people that prefer a nice, clear, crisp kind of presentation on a stock. However, if you join the Substack, you also get access to the Discord. If you join the Patreon, you get the same access to the Discord and you get Patreon articles. So both the Substack and my Patreon allows you to join the Discord, but you don't have to if you don't want to. Generally, I recommend it. This is typically where all my initial research is. This is where I introduce stocks first before anybody else gets to see it. But if you don't like the Discord, you don't have to join the Discord. I still offer the nice, clear, concise information in articles. So that's kind of what I offer or what I do. The Discord is just this guy's brain every day talking about different stocks, right? And so it's kind of the raw, unfiltered version of my opinions on stocks. So if you go to commonsenseinvesting.ca, hopefully it makes that a little more clear. And both the Substack and the Patreon takes you to my Discord if you want that. Otherwise, you just get articles. Thanks for asking. Really appreciate it. And maybe I should make that more clear to some people what the difference is, right? Because we'll get to that in a second. I do think I offer pretty good value. But before I do start talking about specific stocks and earnings or anything else, giving my opinion like I always do, keep in mind, not financial advice. I'm not your financial advisor. And I always say this, I mean this, right? I'm here to communicate about different stocks because I want to build up the microcap stock universe and get more good microcap investors. I'm here to help educate a little bit, but man, I've been wrong plenty of times. We all need to form our own investing strategy, and I don't know anything about you, right? I don't know how much capital you're working with, how much experience you have. So if I talk about any stocks in this video, it's not a solicitation to buy, sell, or hold. It's just a solicitation for you to go do more research on a specific stock. That's all I'm saying, right? That's all I'm saying. Today I'm talking a little bit about, a difference, a change that is happening on my channel. And one of the things is that I think it's confusing because people consider me like a Canadian microcap investor. I am a Canadian, right? My website is commonsenseinvesting.ca for Canada. And so people expect me to only present Canadian stocks. That's not necessarily true to who I am. I've said this many times. The best investment, Canadian stocks, American stocks, European stocks, crypto, the best investment is the one that's going to make you money consistently, not through luck, not by accident, not, YOLOing into Bitcoin without knowing what Bitcoin is and then it goes up and you're a genius, right? But how can I consistently find an investment strategy that is going to make me money over and over and over again, and I compound that money, those returns every year? That's how to build wealth. That is the absolute best strategy in my mind. That is how to invest. So I'm not necessarily a Canadian microcap investor. I'm a microcap investor. I invest in microcap stocks. That is my niche. I have largely been in the Canadian space for the past few years because there has been fantastic opportunities in Canadian microcap stocks. The US stocks were all kind of discovered. The Canadian microcap stocks were flying under the radar. They had less eyeballs on them, less attention, less discovered. They were cheaper. They were very good companies, and nobody knew about them. So I was very much a Canadian microcap investor because there were so many good opportunities in Canadian microcap stocks. Lately, I've seen that twisting. And if through my research, I find that the best investment, the best possible way for me to make money in a microcap stock is in Europe, I'm heading to Europe. If it's in the United States, I'm heading to the US. I made a video once on an Australian stock, EZZ Life Sciences. It went up like 400%, right? I will find a way to put my money in the place where it makes me the most money. That is the whole purpose of investing. Now, in saying that, it's not like I'm running away from some of these Canadian stocks. There are still some significant opportunities. I just made a video and released a free Substack article on Sabio Holdings. Some of these cyclical stocks still that we can track their progress. They have a couple really great years. Share price goes up. They struggle for a year or two. Share price goes down. They go into the next cycle of a couple more good years, share price goes back up. If you're paying attention and you're tracking these companies close enough, there's a lot of money to be made in following some of these companies and investing on those up cycles, right? And these are some very good Canadian listed stocks. There's also still some nice kind of slow and steady companies out there. Cannabis, I'm pretty big on cannabis right now. Those are mostly Canadian companies. I do have a surprise US cannabis stock that I have in my portfolio, but I mean, mostly it's your Canaras, your Decibels, your Oxleys. Canadian cannabis, I'm pretty bullish on, but also companies like, Beware and BioRem. These companies long term, I think, are going to do well, but right now they're not quite as exciting. There's still a lot of negativity around cannabis, and some of these other companies are kind of going through, they're almost cyclical stocks right now. They're kind of struggling. Right now, as a microcap investor, I am looking for, these newer, innovative companies with a long runway for growth. When I'm looking at industry sectors specifically, like I really am excited about this industry sector. I want to find the best company in this industry sector that's got the best new innovation, that has a long runway for growth. Right now, I hate to say it, but I find that's taking me to a lot more USA listed microcap stocks. There has been a shrinking pool of Canadian choices. We have seen very few IPOs. We have seen very few new Canadian companies. And I mean, most of them, let's be honest here, are surrounding small cap discoveries and Paul Andreola. Right? Shout out to like Name Silo, which has just exploded out of the gate recently this past year. Cheel Care is another new company that has some associations with Paul Andreola, right? Name Silo, Cheel Care, what else? There's very few new Canadian companies out there. So it's great. There's a lot more fantastic new in the past 5 years, Canadian microcap investors and microcap investors in general. There's more fishermen, but there's been less fish in the sea in Canada simply because there's not a lot of new companies out there. That has been leading me more to the United States. And this works. This really does work. When I'm talking about industry sectors, keep in mind, let's go back in time a little bit here. This is one of my most famous stocks. I was one of the few people that were looking at Kraken Robotics. It turns out that Matthew Martin at Ribmont was also investing in Kraken Robotics before me. I just didn't know that. I thought I was the first. It turns out I was the second. Congratulations to Matthew. It's up. When I first started covering Kraken Robotics, it was at 28 cents Canadian. It's now at $5 or whatever it is now, right? Kraken is up, just life-changing money. And the reason I was interested in Kraken Robotics wasn't necessarily the company at the time. Kraken Robotics, when I first started looking at them, was kind of shitty. Some quarters they would get 3 million of revenue. Some quarters they would get 6 million of revenue. Some quarters they would be, kind of profitable just by a few $100,000. Other quarters they would be significantly not profitable, right? Like they were volatile. They weren't the best company. And that's why a lot of people passed on Kraken Robotics. But what I was looking at was defense industry spending, right? This is actually a slide from one of my first videos on Kraken Robotics back in like 2022. And I was looking at these unmanned maritime platforms and defense spending and thinking, I am bullish on this industry sector. Kraken Robotics is arguably one of the best companies in this industry sector. I am going to platform Kraken Robotics. Defense and offshore energy. At the time, I had no idea here that Donald Trump was going to absolutely destroy kind of the wind farms and stuff. At the time, these wind farms were pretty popular between the maritime, sea defense, and then, offshore energy. I thought Kraken Robotics has this industry tailwind and a long runway for growth with all these innovative products. And that has worked out perfectly, right? From 28 cents to $4.60 for Kraken Robotics. Another example, right? This one is Gatekeeper Systems. This is another company that I was introducing in around 2022. This is why, right? I was looking around at all the crime. This was kind of late COVID. Did anybody notice how during COVID, all of a sudden there was tons and tons of crime everywhere? And I was thinking like eventually people are going to get fed up. They're going to want video cameras everywhere. And, I was looking at that. That led me to Gatekeeper, which is, video cameras and surveillance for public transportation. Now, they really focused on school buses, but really their video surveillance systems were for public transportation, could be applied to trains and buses and police cars and ambulances and everywhere else. So bullish on the industry sector, found what I thought was the best company with some of the best innovation in that industry sector. I mean, in this case, Gatekeeper was one of the few publicly traded stocks, microcap stocks, that was in this industry sector. But I was looking at the markets and where the industry sector was going and thought this is an industry sector I am bullish on. That led me to Gatekeeper Systems. And I mean, absolute shout out here to Doug Diamond. I remember basically my first interview with Mr. Diamond back in the old days. The stock was at like 20 cents Canadian. And he was even saying at the time, which maybe he shouldn't have, but he was like, I'd ask him at the end of the interview, what's the final thing you want to tell investors? And he said, just buy Gatekeeper stock and don't sell it. Just hold on to it forever because someday we're going to be like a 10x stock or whatever, basically saying that this company was going to succeed. And now you look at them, right? 20 cents Canadian. They hit $2 Canadian today. fantastic work from Gatekeeper Systems, right? This is over a 10x stock at this point. So industry sectors work. Now, that's not saying that I'm still not finding that sometimes in Canada. You look at this is a recent one, another Canadian company. I believe they're out of Quebec. D-Box Technologies, recent winner. I hope it continues to be a winner because, again, the industry sector, don't just watch your movies, feel them. They have these innovative, I like the industry sector, they have these innovative seating systems, haptic technology for seating systems, not just for movies, but for arcades like F1. So am I super bullish on movies? No, I'm not. I'm not much of a movie guy. I don't actually watch TV. But can I sit back and say that the movie industry is struggling, and one of the things that they're going to do is try to make movies more of an experience so they can actually drag people off their couch into their vehicles and go to a movie theater and spend too much money to watch a movie? So they want to make movies more of an experience. Do I think that's an absolutely fantastic industry sector to be in? Yes, I do. And here again, D-Box Technologies, one of the best companies in this space with an innovative technology in an industry sector that I really like. And again, it's up. Now, unfortunately, I wasn't, lucky enough to cover it down here. I think I introduced D-Box somewhere around here, 28 cents, 27 cents. So it's still a bit of a winner, but I mean, yeah, it would have been nice to find a little sooner, right? So this is definitely one of the ways in which I am successful in microcap stocks and microcap investing is I am looking for these, industry sectors that I'm bullish on, finding a company, my favorite company in that space with some innovative technology, and then a long runway for growth. Because as you've noticed, it's 2025. The companies that I just showed you in Kraken Robotics and Gatekeeper Systems, I first started covering in 2022, 3 years. Right? That didn't happen super quickly. That didn't happen in 3 weeks. That didn't happen in 3 months. That didn't happen in 3 quarters even. That took 3 years for Gatekeeper to go from 20 cents to $2. That took 3 years for Kraken Robotics to go from 28 cents to $4.60. So you need to have that little push. Let's see here. Would drones be an industry sector you're bullish on? If so, are there any companies that you're bullish on in that sector? No. So yes, I am bullish on drones, but here's the problem. It's too obvious. The stocks, the companies in drones are overpriced and mostly shitty companies. I almost look at them like cannabis. Everybody got so excited about drones, especially when the Ukraine-Russia war started, because drones were in the news every day and drone stocks went shooting to the moon. And most of them were unprofitable, cash-burning companies. And that's also part of the reason why it reinforced my thesis around Kraken Robotics, is everybody was looking for drones. I have this little company here dealing with underwater drones, and the valuation was much better, and it was a much better company. So no, there's actually no drone company that I'm very bullish on right now. I hope that changes, but I honestly think that they need almost like a cannabis-like crash, where basically all the drone companies out there just run out of money. We get the weak dying off. We get the best few drone companies rising to the top, and then I might be excited about them again. But I mean, again, it depends on the valuation. At the end of the day, though, what I am seeing, or what I have been seeing recently, especially in the cannabis space, in the Canadian markets, Canadian listed stocks, is there's more fishermen and there's less fish. That's the point of this. Like, as much as D-Box has been a success, it was harder to find that inflection point. I mean, you notice even myself, I missed the first rally here because this was a pretty high-risk company. Even now, the company's only got about 8 to 10% of growth, revenue growth. It's not like they're knocking their doors off anybody, right? Not massive revenue growth. Even with the revenue growth and even with all the risks, because there's more investors and less companies out there to invest in right now in Canada, you see how quickly this discovery happens. You almost can't blink You can't be one of those patient investors who says, I'm going to take a month and research this stock. Sometimes if you found D-Box right here and you decided to wait a month and research the stock, it's already up to here, right? So it's a more competitive space right now in the Canadian markets. And while there's still opportunities out there to make money, and there's still some good companies out there, and my coverage on these stocks are not going away, it is getting harder. Less fish, more fishermen, right? So when we look at this, right, some of these other ways to make money, like this is Sabio Holdings. This is a cyclical company. I just released my article on Sabio Holdings and a video on Sabio Holdings. You have to pay attention, and this is where that extra work and that hard work has to set you apart from some of the other investors. And look, again, I might be completely wrong about Sabio Holdings, but that is one of the unfortunate parts with having more fishermen and less fish out here, is we almost have to take on this added risk right here to find these companies before other investors. I made 2 videos on Sabio Holdings in the past, way down here at 24 cents, and then up here at I think around 30 cents or whatever it was. You know, it went up 250% from my first video, went up 200% from my second video on Sabio Holdings. I finally released a third video. They're back down to, 40 cents Canadian, roughly, something like that, right? So another high risk kind of cyclical company that I'm willing to take a bet on. And here's another one, right? Symmetrix. This guy, I made a video. It's funny, I make these videos sometimes. I think this video got 700 views. Didn't get a lot of views. This microcap stocks could surprise everyone in 2025. I made this video right here. This is me talking about their little rebound that they were getting right back around here. I love this first little part where a stock kind of bottoms out right here, shows a little bit of strength. Man, does that ever look like a sexy time to buy for so many of these microcap stocks out there, doesn't it? And again, I made my video, took a little while. This was May. Now we're sitting here, right? September, and it's up from, whatever price. What was the price? I think it was 25 cents is when I made this video, 25.5 cents on Symmetrix. It's now up to 33.5 cents and still growing. So you can still do it. You're taking on some risk. It takes some work, but there's still some companies out there. I do personally, however, like to be a little bit more alone, few less fishermen, looking in, buckets of stocks that aren't looked at as much, less investors, less exciting, right? I like the peace and quiet. And again, that's where I'm doing this research and introducing these stocks for the first time, is on either my Substack or my Patreon and in my Discord. Check out commonsenseinvesting.ca. Now, what got me onto this topic? Why am I talking about this today? Well, it's just good timing, right? Because I'm recording this on September 22nd. This is a post from Paul Andriola, who I've talked about a few times, the host of Small Cap Discoveries, where I will be attending in Vancouver, September 29th, September 30th, right? Wrote this on September 21st, so just yesterday, 7,492 views. Basically, every Canadian microcap investor in Canada saw this post as Paul basically only invests in Canadian stocks, right? What's a Canadian microcap that you think our team at Small Cap Discoveries needs to take a good look at? So not what the best company is, which one is going to make you $1 million. Just pitch me a stock that our team needs to go take a look at. And I must say, in the past, over the years, Paul always released posts like this, right? And a couple years ago, when he'd release a post like this, I would get a bunch of names, or he'd get a bunch of names. People would pitch him these stocks, and I would look through the list, and I'd be like, oh yeah, look, I don't know this company. I don't know this other company. This is a great opportunity here. And it was a great way to idea share. And I would usually find 1 or 2 kind of fantastic companies just looking at Paul's post and getting some ideas. Recently, though, I noticed the last couple times he's posted this, he usually does this once every couple months, it's a lot of the same companies. It's companies I know. It's companies that are getting recycled, or, companies with more risk to them. So let's go through some of the lists, some of the replies that Paul got from this question. What's a Canadian microcap that you think our team should look at? I love James here, right? He pitches ADF Group. We've known and been covering ADF Group for a long time. Paul's been covering it for a long time. So it's fun to get that little shout out for your favorite stock. And look, ADF Group has done okay. It's bounced off. It was down to $5. Recently, it's been up to $8, $9, $10. So it's done very well, but it's well known by small cap discoveries. Oils, this is another cannabis stock, right? We're covering a lot of cannabis stocks at this point. Similar, maybe a better, slightly better company, more mature company right now than the stock I cover, which is Glow Life Tech, which is another cannabis company that does a similar thing. You know, basically these cannabis oils. The difference is Glow Life Tech has this IP that maybe can be put into vitamins, nutritional supplements, and, you know, has this other market revenue stream potential that oils doesn't have. So I'm aware of the company. It hasn't had a lot of growth lately, so it's not a bad pitch, but not super exciting. And then I must say, there must have been about 6 pitches for this MineHub, MHUB. This is a Canadian company out of Vancouver. It does have a TSXV ticker. There must have been about 6 people that pitched MineHub to Paul. So I went and took a look at it, right? 73 cents, 5-year chart, basically got obliterated, a little bit of recovery right here. That is MineHub Technologies, $64 million market cap. Okay. You know, trailing P to E, nothing. It doesn't make money. EV to enterprise value over EBITDA, it doesn't make money. It's not profitable. 35 times sales. My cutoff is always 10. I won't pay more than 10 times sales for a company. So already I could see what's going on here, right? We've got a company that's 35 times sales and it's unprofitable. So this is going to be a highly speculative company. You know, sure enough, they did do well here. 2023, 2022, they had no revenue. So at least they have some revenue. Yay for them. $186,000 in 2023, $2 million of revenue in 2024, and trailing 12 months, they're actually down to 1.6 million. So 1.6 million in revenue for $64 million market cap company. Not necessarily my favorite, right? What did they do? Digital trade in the mining and metals supply chain. And this is what we're seeing, right? Speculative company in the Canadian space. This is a company based out of Vancouver, Canada. So Canadian company, highly speculative, 1.6 million of revenue, $64 million market cap. Again, too many fishermen, not enough fish. Valuation very high because of that, right? When you don't have a ton of options, you're reaching for these stocks that don't necessarily fit your criteria, that have more risk than maybe you would like, that are more speculative than fact-based evidence type companies at this point. And this is what I'm seeing over and over and over again. And I do not want to overpay for companies. Now, in saying that, you know, keep in mind, there's a difference between investing and trading. Obviously, when I see like 6 different people pitch a stock to Paul Andriola, the first thing that goes through my head is this is probably a promoted stock somewhere. Somebody's promoting it. It's got some investing group that's pushing it. And if you think, again, that you could make money on a stock like this, not necessarily because of the financial fundamentals, but because of the technicals, because so many people are pushing that this stock is amazing, I have no problem. I have no problem with people going out there and trading, riding the wave and making money on some of these stocks. But please keep in mind there's a huge difference between investing in a company and buying shares of a company and becoming a part owner of that company and trading, right? There's different ways to make money here. And when I see companies like this, you know, this is very highly speculative, looks more like a trade to me than anything else. Here's another one, right? So this is P14 Capital pitching TBRD. Check out the P14 write-up at the link in the bio. I will actually link down below in the pinned comment to P14 Capital's write-up on this company. What this is Thunderbird Entertainment Group. P14 Capital actually intended to have this article as a paid article. I think accidentally released it as a free article and is pitching the Substack here. but you can actually go read this article for free right now. One of the first things that I will notice compared to my own platform is I'm probably undercharging. I'm probably undercharging. I'm seeing more and more of these Substacks pop up for $20 a month. I charge or $220 a year. Right now, my Substack is $8.99 per month. Canadian. This is American, I'm assuming. Mine is Canadian. That's like what, $2 American? No, I'm just joking. It's probably around $5 or $6 American or $80 a year Canadian. That is what I charge. Now, here's the interesting thing. And I mean, I'm not criticizing P14 Capital here, right? Make your money, right? If you're putting in the time, putting in the work, you should get paid for it. I should probably charge more. I don't. That's just the way it goes. I've already researched Thunderbird, right? So it is interesting to me. I actually gave them a pair of 10s, which isn't bad. I don't know if if you watch my channel a lot, I compare investing to poker quite a bit. I should actually think about doing this a little bit more often because so many people out there do like, oh, this is a 2-star stock or a 4-star stock, and they do the whole 4-star system or star system. I should actually consider ranking some of my stocks as far as poker hands because I do think microcap investing has so many similarities to poker. But I mean, I am interested in Thunderbird Entertainment. I think they might be close to rock bottom or at rock bottom. No real debt other than their current production debt. They've got $39 million in cash. They got 50 million shares, 20% insider ownership. There's a lot of good things going for this company. Quantitatively, this company makes sense. Qualitatively, I don't really like them too much. Their shareholders have been absolutely wrecked over the past few years, and management has been collecting very high salaries. So they're down 23% in the past year. This is when I actually researched Thunderbird Entertainment. This was in late August, and they're actually even down from when I researched them. So I thought even here, I was like, oh, it looks like they're at rock bottom or close to it. And they actually fell down a little bit, right? So that's their 1-year chart. This is their 5-year chart, right? Massively up in COVID. Now they're way down here. Maybe they're changing something and change is good. Maybe they can do well in the future. But I mean, I have to look at this run here and just say that this was poor management. They're going to have to work really hard to convince me that there has been change in the air. But in any way, this is one of the better pitches to Paul Andreola. This is one of the better companies. A company that isn't my favorite, that I'm giving a pair of 10s to as far as how good this company is, which isn't bad, but it's not the best hand in poker, that's for sure. And this is one of the better pitches to Paul Andreola. What are some other ones, right? D-Box, obviously, we know about D-Box. I showed you that. RenoWorks software. People forget that I actually introduced RenoWorks software. And then Herb. This is Herb. I've never heard of Herb before. So let's break this one down a little bit, right? This was this guy, and it's amazing. I think this video got something like 700 views as well. It wasn't very well received. People didn't like it. This is when I made my video on RenoWorks software. That was in January 30th of 2024. Share price, I think, was at 25 cents, 24 cents, something like that. People did not like this stock because it had already gone up a little bit. You see that little spike? You remember at the start of my live stream how I said once you get that little spike up, that can be a fantastic time to buy a microcap stock. It's amazing to me how many people won't buy that spike up because, oh, it's already up. I missed that 20% return, so I'm never, ever going to invest in this company again in my life. Well, it went down a little bit here for a ways. Took a little while. It actually took a little more than 12 months. Took about 14 months. Now RenoWorks is at 62 cents Canadian. It's up 158% from my original video here, January 30th of 2024. Again, I tell people all the time, I'm not making these videos for my own health. I do kind of do it for fun, but it's more than that. If I am making a video on the stock, it is because the company has something I like. There's something there that I like. And there are going to be losers. I am going to get some wrong, but I'm not making videos just for shits and giggles, right? Sometimes these videos take me, 8, 9, 10 hours of work to make. So if I'm making a video on a company, there is something there. That was, RenoWorks software. I introduced at 24 cents. Now it's up to 62 cents, right? The other one here is Herb, right? This is it here, Herbal Dispatch. It's on the CSE, which isn't my favorite, not my favorite exchange, the Canadian Securities Exchange. It's a 7-cent stock, pretty volatile, right? Up 40% on the year, but that's only because it started the year here. Basically, the whole year's been like that. So that is Herb. We've got a company here, really tiny company, 5.72 million market cap, 10.4 million of revenue, and negative 4 cents EPS. But you know what? It's down from 9. It's down from 10. So this is not the worst company in the world. I'll give Herb a shout out here. It's probably too early for me. But a $5 million market cap company with 10 million of revenue and not profitable yet. I need to go do a lot more research, but it's not the worst stock pitch out there. I've seen worse. This is a company that owns and operates cannabis e-commerce platforms in Canada. It's again headquartered in Vancouver, Canada. There's their website right there. So lots more research to go on Herb, but I mean, at the end of the day, not a bad pitch. Gatekeeper Systems. Somebody pitched Gatekeeper Systems. Thank you very much. I've already talked about that. It's gone from, at what point do I need to leave a stock behind, right? People always ask me about this. Well, how come you're not talking about Gatekeeper Systems as much? Well, because when I was talking about Gatekeeper Systems, it was 20 cent share price, and people didn't like it. People didn't like the company, right? And so I was going against the grain. I was highlighting a company that I thought was good, that the stock market did not think was good. And then suddenly when they succeed, it goes from 20 cents to $2. It goes from, a $20 million market cap to a $200 million market cap. For me at this point, at a $2 share price and $200 million market cap, for me, it's a large stock. I now go looking for the next Gatekeeper Systems. Right? So this is when other people find companies and I kind of pass the torch a little bit. Company's been very successful for me. Congratulations. Absolutely love Doug Diamond. But, I'm not going to go platform Gatekeeper Systems all the time because I'm looking for the next Gatekeeper Systems. Alvo Petro. Somebody pitched Alvo Petro. This is another one on my Discord. We're already talking about that. We've got I am not a mining or oil and gas investor at all, but I've got enough people on my platform that we actually have a whole category for mining stocks and energy stocks, and I don't do any of that research. So don't expect this guy to contribute anything. But I mean, if you want to start a channel in the Discord and talk about some of these mining and energy stocks, absolutely go for it. I completely support that. We've already been talking about Alvo Petro Energy. This is a good pick. I won't pitch this one because I'm not an oil and gas guy, but this is a pretty good company, right? So good pitch here from Andrew. Then we got some others, of course, AAP. AAP, of course, Paul's the director of AAP, Atlas Engineered Products. We all know about Atlas Engineered Products. Well Health Technologies. I might be the only person in the world that likes that company, but I've been covering Well Health for years. Again, I've stopped covering them lately because nobody wants to follow this stock anymore, unfortunately. I like them. MaxQ, which is a highly speculative Canadian space company. They're building a launch pad for satellites out in Nova Scotia, Canada. Then we've got this company, DSY.V. I looked into this one, revenue of 1.13 million, net loss of 0.0, so $70,000. That's worded really poorly, right? Adjusted EBITDA of $120,000, so that's a positive adjusted EBITDA. That might be worth looking at, this company here, DSY.V, until I kind of look into them. And I mean, yeah, they might have positive adjusted EBITDA, but absolutely zero growth for many, 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 many years, right? So again, another company, another pitch that's just a little bit too much hair on it, right? Too many problems, too many worries, too much risk, not enough potential. Duro Clean Technologies, this company, pre-revenue, I can't say enough bad things about this stock. ABXX, market cap of $1 billion. That's too large. Tiny here is a venture capital company. I don't really love investing in venture capital companies. It's an ego thing for me. I like being able to take my money, do my research, and invest in companies I have conviction in. If I'm investing in a venture capital, I'm giving my money to somebody else to invest. That's too hard for my ego to do. Now, maybe I could do that if it's Paul Andreola, somebody who I know well. But I mean, for me to just throw money at a venture cap doesn't really fit within my investing style. And then we've got D-Box mentioned again here, right? So when we look at this, Sizzle Brands was another one that was pitched to Paul Andreola, CZZL, total revenue, $7 million, total operating expenses of $14.8 million. No thank you, right? Thank you, but no thank you. So when we go through all these pitches, again, all the same companies, at the end of the day, with all the stocks that were pitched to Paul Andreola on X on September 21st. Now, maybe there's some new ones I haven't seen yet. I went through this, I think it was this morning. But with all the pitches that I saw to Paul Andreola, find me the best Canadian microcap stock out there. In my opinion, the best answer was none. There was none that really knocked my socks off, that really impressed me, that, I just had to go research. And then I got stuck into research because I was so excited by the opportunity. There's none of that out there. There's none of that out there, right? So all the stocks, 7,400 and some people viewed that post from Paul Andreola. And in my opinion, the best two pitches out there were Oils, Next Leaf Solutions, oils.cn, which is on the CSE, which isn't my favorite, right? And Thunderbird Entertainment Group from PSI Capital or P14 Capital, which I'll put down below in the pinned comment, right? This is a Canadian media company that's down 23% on the year, and maybe they're going to bounce back and be a better company than they've been in the past. That's it. That's it. All those stock pitches, I got two kind of, pair of 10s right here for Thunderbird, and maybe here we got a 10-9 offsuit here in Next Leaf Solution. That's the best ideas that people have. So, this for me, when I look at the list, and I'm not calling people weak here for not having good pitches. What I'm saying here again is that the Canadian microcap space, lots of fishermen, not enough fish. And we're recycling the same companies over and over and over again. The same pitches. I see the same companies over and over again. And there is money to be made in that. There are going to be these cyclical stocks. There are going to be these stocks that suck for a few years and then find some way to turn it around and change and improve. And we're going to make money on those. But overall, if I'm truly looking for the best new innovative companies with a long runway for growth in industry sectors that I like, I have to say a lot of the stocks that have been popping up on my channel, and I've been posting about this recently, have all been American listed stocks. On my channel, I've made a ton of money on Mind Technologies. This stock went from $3 to $10, back to $5, up to $11, and then it went down to $8, and now it's up to $9. I mean, whether you are investing in this stock and making money or trading in this stock and making even more money, it's just been a winner all around, right? CRMD I've been covering for a while. NextGel was one of my favorite picks for the Planet Microcap Toronto conference coming up October 21st. Neuraxis I made a video on probably a month ago. Didn't get a lot of views for that video, I must say. People didn't like this company. It's already up 15%, and 2026 is the big year for Neuraxis. So it's already up, and we're not even into the big year for this company. And as I've been doing my research, finding and researching these stocks, I have to say, popping up more and more often, that pretty much the next 4 stocks I'm going to present on my channel are all U.S. listed stocks. I have a growing list of impressive U.S. listed stocks already researched in my Discord. I'm really excited about some of them. So that's it. That's my rant. That's my presentation. That's a whole list of stocks to go through. That's my opinion on what must have been about 50 different companies that were presented to Paul Andriola on that single, X post from him just yesterday. Maybe I missed some. Let me know if I missed some. Let me know if there's any from this list you think I got wrong or I didn't look at hard enough or maybe is new since I last looked at them. I'm willing to take a look, maybe not on this live stream, but I can always go through later. Don't forget, let me know what your favorite company is attending small cap discoveries in Vancouver here. I'm really excited. I'll be on a plane probably this Friday, headed out to Vancouver. Looking forward to that little trip. And yeah, that's all I had to say. So presentation over. Thank you for watching, but now is the time for questions and answers and discussing other stocks you might have interest in. So if you just wanted that presentation, thank you for your time. And give me a thumbs up if possible before you take off. But now it is time to talk about what you want to talk about. Itifos is presenting at the small cap conference soon. It trades at like 4 PDE. You talked about it once. I made a video on Itifos once, didn't I? Is it on my new channel or is it on my old channel? That's a good question. I will try to Google that while I talk about it. It's like an American mining company. And the reason, it must have been on my old channel because I don't see any videos popping up when I search. My concern with Itifos was that how are they going to grow? I felt there was a barrier. They were close to the end of the mine life for the mine that they were currently working on, and that's why their valuation was so low. So when I pay for a high valuation, it's because I expect future growth. If a company is at the end of its mine life and like there's no room for growth, then I'm not that excited, and that's why valuation is low. But I do believe Itifos has extended their mine, or they've applied for and received approval to actually expand their mine into other areas, and that way they would be able to get growth. I am looking forward to hearing from this company, from seeing their presentation again, because it has been a couple years since I covered them, but I do think that this has been a winning company. I'll go check. But that was my concern with Itifos, right? Now, in saying that I'm not a mining guy or anything like that, keep in mind is that I'm much more willing to go into this space if a company has revenue, for one, and is profitable, secondly, right? If a mining company is growing and profitable just like any other company, then I'm fine. I will go invest in it. That's no problem. At this point, though, Itifos is pretty large. $531 million market cap. This is their 1-year chart. It's up 79%. This is their 5-year chart. So yeah, that probably would have been a winner. If I made a video on Itifos, it probably would have been late 2022 or early 2023. It went down for a while and now it's back up because everybody wants mining stocks. So it would be interesting to hear from them. Profile here. Let me see if I was right. A phosphate and specialty fertilizer company, right, operating through Conda, Arrows, and development exploration segments. They're headquartered in Houston, Texas. I thought their mine is somewhere else there. Their mine is somewhere in like the Midwest or some crazy place like that. So good for them. Not my niche, not only because they're mining, but also because they're a $500 million market cap. But yeah, they've been successful. So congratulations to them, right? It's my birthday today, Cameron. How about a 30-second piece on Well Health Technologies? Thank you so much. Yeah, so Well Health Technologies, I might be one of the few people that likes this company, and I think that's too bad. So if you like Well Health Technologies, did you hear about WISP and what WISP is doing? And that's why share price is up. So if we look back on Well Health Technologies, this is when I was first bullish on them. They were $2.75 Canadian. They went up to, $5 or $6, and then they suffered for a long time. This is a company like Mind, right? Success with Well Health Technologies definitely depends on what price you you pay for this company. If you bought Well Health right here, you're super happy about the stock in the company because it was up to here and now it's going up again. And you know, analysts are saying that this is an $8 or $9 stock. So hopefully it continues and you've done very well for yourself. They have struggled over the years because they had a very high share dilution. If we actually look at the company, this company was growing like gangbusters. It was absolutely insane, and it's still growing. And if I expand this out, you know, 302 million of revenue in 2021, they had something, I think the year before they had like $50 million of revenue. They went from like 50 million of revenue to 300 million to 569 million, 766 million, 919 million, and now trailing 12 months, you know, over $1 billion. This is the frustrating thing for me, and I've always said this, is that people undervalue revenue growth. If you watch a company like Shopify was dead money for years because it had just revenue growth and wasn't very profitable. And then the second it shows even a hint of profitability, it just absolutely goes to the moon. And this is what I'm hoping that Well Health Technologies does. They have not been focused on profitability over the years. They have been focused on revenue growth, capturing the market in Canada and partially in the US, but mostly in Canada. My investing thesis for Well Health Technologies is that eventually you won't be able to go to a doctor in Canada without using a Well Health Technologies service. So that's what they're trying to do. Because of that, they have been unprofitable or at least volatile, right? They've been all over the place with profitability. They own another company. I forget the name of the company now. You can tell me what it is. It's a little AI company, and basically their profitability goes up or down depending on what the share price of this little AI company does, which is absolutely crazy to me. But the reason why share price is up here is GLP-1s. Those are like the Ozempic for fat loss. Their US subsidiary WISP is now offering GLP-1s. So that's pretty huge. GLP-1s and those Ozempics are basically like AI or data centers or drones. They're super hot right now. Like Hydrate, all these other companies have been just going to the moon, selling these GLP-1s. And now Well Health Technologies is also in the business of selling GLP-1s, except they have actual doctors doing actual consultations and prescribing these in like more of a medical environment instead of just selling them online. So this is why share prices recently got a bump from Well Health Technologies. One of the reasons I've stopped covering this company, unfortunately, is their accounting policies are so complicated. This is a very complicated company to actually follow, simply because their earnings are so hard to go figure out and go read. Right? They simplify it here in the press release. You know, your average retail investor can go read these press releases and kind of get a sense of how the company is doing. But to actually go read the earnings, if you're an investor in Well Health Technologies, it really takes about a day at least to go through the earnings and understand everything. But I still like this company because, again, in my mind, the thesis is Canadian healthcare is in trouble, you know, not enough doctors, too many patients, and Well Health Technologies is the company, one of the companies that's modernizing healthcare divisions. They're growing their revenue quickly. Eventually, once they reach a certain size, they're going to have operating leverage. That's the thesis. I'm not saying it will happen, but that's the thesis. Once they hit that size, once they have operating leverage, they can become pretty profitable pretty quickly, and this company should really take off. And, you know, their CEO is also a very bright guy, and he's actually not a healthcare guy. He's just a guy who likes solving problems and making money solving problems. So I like that. They have to climb a wall of worry. One of the reasons why share price went down like this is because in the past they had a lot of share dilution to get that very, very high growth that they were getting. Their share dilution is going away. They need to fix the balance sheet a little bit. Rate cuts will help. At the end of the day, I still like Well Health Technologies. And I was telling people this too. This is a disappointing stock because, you know, people feel like it should be an $8, $9, $10 stock, and I won't argue with you. I think it should be up here and not down here. But at the end of the day, from $2.75 to a little over $5, in a couple years is still a pretty good return. It's not the end of the world. It's not like 100% gains in microcap stocks that you typically see online. But I mean, if this is a company that's churning out kind of 20% returns every year, or, you know, some years it's a little bit flat, but next year it's up 50%, that's not too bad. So happy birthday. Happy birthday. It's actually my birthday tomorrow. So congratulations. I'm not much of a birthday guy. I'm probably going to be grumpy and angry tomorrow. But yeah. Yeah, Intermap, just, is it Intermap Technologies? It must be. Just so many companies have technologies in their name that I've just... I've actually just forgotten technologies on so many stocks these days and just call them Intermap as well. $20 million financing. That's a great idea. That's a great idea. Share price is up, you know, way too much. This is a company with revenue guidance of, you know, 30 to 35 million. I'll bring it up here. Intermap. They have revenue guidance of 30 to 35 million. Intermap does, and Intermap, you know, $210 million market cap with maybe $35 million of revenue this year. This is their 1 year chart. Down here, I liked Intermap. It benched up recently to well above $3, and today was at $3.49. They would be stupid to not do a financing at this price. I think they just did the financing at $3. That's fine. That's great. They're going to get a bunch of cash, hopefully, to, you know, the speculation is that they have imminent large new contracts coming in and they need this cash for these large contracts. Maybe. It could also be that at this share price, you just got to take the money and run. And when they do get those large new contracts in the future, hopefully, then they have the cash sitting here. This just makes total sense, right? Gatekeeper Systems did one when their share price went up. When your share price is going up this high, this quickly, at this kind of valuation, you got to do financing. What does this mean for share price? I would like to see it fall back here. I wonder if this push up wasn't the institutions preparing for the financing. And now that the financing is done at $3, I would actually like to see share price kind of fall back here. Maybe it won't. Maybe they will get that big contract. They're going to announce it in a week. Again, I'm speculating. Maybe that happens and share price continues to go up. The problem is that the higher your share price goes, the less people are going to buy it. So I do like these, you know, lower share prices, and not like this would be low. This would be $175 million market cap for a $35 million revenue company. It's not like this would be cheap, but I do like these lower share prices sometimes just because it allows more investors to buy. Right? There's a lot of investors that might buy at this price that are not going to buy at this, you know, $3.49. So congratulations to them. Smart move. You're not going to see me criticize it at all. I'm an investor, though. I don't mind financings. Everybody, oh, share dilution's the worst. Share dilution's the worst. It depends. It depends what they're going to use that money for, right? If you do a 10% financing and that gives you 50% growth, that's a win every time. So it depends how they're going to use that money. Love the poker hand analogy, much more illustrative of conviction strength. I don't know if enough people know poker that I can use the poker hand terminology, but maybe I should, and then people just have to look it up, and that's one more step. But yes, microcap investing is just like poker. I compare it all the time, right? You get your cards, you get your hand, you get you don't get all the information, you get a certain piece of information. And the more research you do and the harder you work at microcap investing, the more you can look at your hand and determine whether or not it's a good hand or not. What are the odds of me winning with this hand, right? And then you make your bet. You do. Am I buying a no position? Am I folding? Am I, going to invest a little bit? Am I going all in? You've got this range of options of how much money you want to put in. And then you could play the room and you get more information. You get the turn, you get the river. Those are earnings coming in. That's more information coming in through press releases. Those are the inputs. And as you get those inputs and you compare those to the hand that you already have, you make more decisions. Am I going to hold? Am I going to fold? Am I going to bet more? Am I going to go all in? You're making those financial decisions again, right? So I love comparing microcap investing to poker. And there's just so many similar things, right? Like when you're pot committed and it's like, but you know, on these stocks where it's a losing stock and it just keeps going down and you just keep shoveling money into it, even though you know it's a losing hand. And the best thing to do would just fold, just give up, right? You don't need to keep shoveling money into this losing hand, but you do like there's so many comparisons between poker and Texas Hold'em poker and microcap investing. I love it, right? Intermap has a halt, big news coming, I hope. I haven't seen the halt. So if they do, yeah, hopefully that's a press release, but right after a financing, if they're halted, maybe it's something to do regarding that financing. So maybe they forgot something or have to amend the financing. Name Silo up almost 10% today. I love this stock. It just keeps going up. Another winner for you. Yeah, thank you. I only caught it I covered it on my Discord, but I wasn't going to make a video on Name Silo because it's a venture. It's basically investing in Paul Andreola, right? So I wasn't ever going to make a video on it. And then I realized that people just did not understand what Name Silo was. And so I had to make a video on it, not introducing the stock, but just helping clear up to people what Name Silo as a company was. And that video was significantly lower in share price than where it's at today. And that wasn't anywhere near close to the bottom for Name Silo. People were researching Name Silo on my Discord at 30 cents. Where is it at today? Name Silo Technologies. So yeah, I mean, whoever was researching and buying Name Silo at 30 cents, I wish I had joined you with that. This is one of the most successful stocks of the year, if not the most successful stocks of the year, just because there's no lumpiness. There's none of this. There's none of this like, oh, patiently waiting and then benching up. There's none of those crazy movements. Basically, every week that you bought Name Silo, the next week you were making money because it just kept going up. Look at this little tiny dip right here, little tiny dip, and then it goes up twice as much the next week, just up, up, up. Yeah, in June it was slow for a little while, and then, oh no, it just shoots to the moon. So definitely Name Silo. One of the most successful stocks of the year, if not the most successful stocks of the year. Absolutely fantastic. That was a good enough 30-second piece on a well from our B-Day. Thanks, Cameron. Cake and a beer for that well shout out. Well, hopefully you make one. Look, that should be an $8 or $9 stock. It really should. So, the hard part is analysts have been saying that for years and it hasn't gone to $8 or $9. I do think that Well Health is one of those companies where someday that patience is going to pay off and it's just going to go shooting straight up. And we get those. We get those companies that they don't all look like Name Silo. They don't all look like this steady path up and you just have all this time to research and buy, and any time along the path, if you buy, you make money the next week. Sometimes we do get those stocks that are just flat for a couple of years and then they go straight up. I hope Well Health Technologies is one of those companies. I'm excited to learn about some American stocks that are catching your eye. Yeah. I think you should be. I'm pretty excited too about some of the innovations, some of these innovative companies with long runways for growth, and it is pretty exciting, right? What's your take on HAI? Is that Hayvision? My question with my question with all these stocks is, what's your pitch? Why would I buy it? Right? Yeah. So that one's Hayvision. Let me pull this up here. That's it right there. So, what's my take on it? Well, investors in the past year haven't made any money. They're actually down 7%, right? Investors of Hayvision in the past 5 years, if you've been holding for 5 years, you're down 28%. So my first question is, or what's my take on Hayvision is, my take is it sucks. Right? I mean, convince me otherwise. But when you hold a stock for 5 years and you're down 28%, that's not a good return. If you bought it last year and you're down 7% and you made no money, that's not a good return. Maybe this is what you're talking about. where if you're lucky enough to buy at the absolute bottom right here in April of 2025, and by the way, this is when just about every stock on the stock market was kicked to shit thanks to Trump and the tariffs. There was dozens, well, not dozens, thousands of companies that were at absolute rock bottom here in April. Many of them have absolutely shot to the moon in various ways. You know, am I super excited and would consider Heyvision a winning stock because they were at $4 at rock bottom in 2025 in April, and now they're at $5? I mean, congratulations, that's up a buck. But for me, that's not enough. Like, we've had stocks that are up 200, 300% since April 2025. So that's my take. When I start looking at a company and I look at this chart, my first question is, what the hell has changed? If nothing's changed, then why would I be interested in it? I know I've researched it before. I thought, okay, there's some potential for maybe next year they get 10% growth, return to profitability. But when I start having to make excuses for a company before I even buy it, that's not a good sign, right? Revenue is down, 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 and that's fine. I cover a lot of inflection point stocks where revenue is down. One of these US stocks I'm going to introduce, pretty soon, revenue has been down because they're doing a restructuring of the business. The difference is when a company does a restructuring of the business or revenue is down for a year or 18 months, I expect growth to return and to return sharply. I expect, 15, 20% revenue growth once that rebound changes, once that inflection point happens. I expect strong revenue growth and strong profitability to go along with it. Is Heyvision going to get that? I don't know. Maybe. But last time I looked, I didn't see that. And when I'm looking at other inflection point stocks, like I just covered Pivottree, that's a hell of a company. Their revenue's still going down, but they're profitable. They're growing in profitability. So again, the comparison, okay, it's up from $4 to $5, but is it better than Pivottree? Is it better than what ADF Group has been doing as far as surviving the tariffs? Is it better than what Kraken, is it better than so many of these other companies that I'm looking at? No, it's not a bad company. It's just, I could find 20 better companies for you in probably a couple minutes, right? So it's not a bad company. It's just not my favorite stock. So this is Itifos. The new mine is opening this quarter. Most of Cape is done. Another 15 years of rock now. Yeah, so that's why. Congratulations, right? That patience pays off. I made a video on them in 2022 saying that I don't know where the growth is going to come from. They're going to need to open a new section of the mine. And now we're sitting 3 years later in 2025. That new section of the mine is opening and share price is going back up. That's how some of these mining stocks work. I typically don't have the patience for that. I hate to say it. Every stock I invest in, I set a time target, right? Am I buying the stock? Am I going to reevaluate every 3 months? Am I going to reevaluate on every press release? Am I going to hold it for 6 months and reevaluate? Am I going to only look at the annual audited financials and reevaluate? I have to say personally, I brought up that little slide there, and that was, what was that on Gatekeeper or one of the stocks I showed you that said 12 months? And I do that for a reason. 12 months is about all I have patience for. I will look at a stock, I will like a stock, I will invest in a stock. My thesis needs to be 12 months, and that inflection point, that change needs to be 12 months or less. Otherwise, I tend to move on. So congratulations to Itifos, but again, you have to build each investing strategy that works for you. I'm not saying that's the right way to do things. That's just what works for me. And for me personally, anything longer than 12 months, I'll find some new stock that I think is going to go up 50% in 2 months, and I'll take all that money, right, from this stock that might go up in 2 years, and I'll take all that money and I'll put it in this stock over here. So I don't have the patience for that kind of investing. Last week on Market Call, the analyst spoke of a battery company called Electrovaya. They make batteries used on forklifts, etc. Walmart is one of their customers, expanding into data centers. And he thought, yeah, I've been I wouldn't say they're promoted. They're heavily discussed. I get emails from them every couple weeks to attend investor conferences. I've gone to a couple and listened to the pitch from the company. I'm not super keen on battery stocks yet. To me, it's almost like early cannabis. There's hundreds of battery companies out there, and there might be 5 that actually end up winning or finding the successful battery or able to do it profitably and with growth and, the consistently over many years, and they're going to be better than the competition. They're going to win. When I look at that industry, I just spent the whole first part of this video looking at industry sectors I'm bullish on. Right now, I'm not super bullish on battery stocks or the battery sector because there's too many companies, there's too much competition. It's too hard for me to look at all those different companies and pick out the few companies that are going to win. So it's not a terrible looking company. It's just not, I have better opportunities out there personally. It's not my favorite industry sector. That's my own bias. If you work in batteries, if that is your industry sector, if you're an expert in batteries, right, if that's what you do, you're a battery salesman, or I don't know, electrical engineer, and you work with batteries all day, that's probably an industry sector you should be investing in, right? That's the point. We all build our different strategies around our experience level and our competence. And for me, I'm not competent enough to look at the 100 different battery companies out there and say this one is better than that one. So that's where I'm at. The Fresh Factory CEO just did an interview and stated that the new manufacturing plant will drive a lot of growth in the cannabis sector. Yeah, that's good. That's Fresh Factory. This is another boring one. I make videos again on these companies, and sometimes they take a while and people don't like the stock when I make my video on it. And then when it goes up, everybody likes it. I made a video on Fresh Factory. When was it? Somewhere in here. It was, 85 cents or something was the share price here. And now Fresh Factory is up to $1.15. Congratulations. I don't think it's done there. They got more manufacturing coming online pretty soon. But I mean, this was one of those stocks. Remember I said 12 months? I was watching this stock for a long time, and it was flat for a long time. And I said, look, this inflection point, we're getting closer. We're not here yet, but we're getting closer. There's a couple more people talking about the company. Their manufacturing facilities commencing right now, their main one. They're building a new one that's going to be ready next year. It feels like we're getting closer to that inflection point. I make the video here. I'm not making it back here, although sometimes I do introduce a stock too early. I'm not perfect, but this one I did get fairly right because I introduced this company here. It did not take very long, basically until August, until Fresh Factory is now up to $1.15 and hopefully growing from there. I like this company. It does have risk. It does have risk. A lot of preferred shares. It's completely controlled by insiders. But yeah, I like the Fresh Factory, and it's good to finally see the success there. And again, it's just another introduction from Common Sense Investing to an okay looking company, and it's now up pretty significantly. Awesome. I like Well. Also, nice bump the last few days. Healwell AI. Healwell. That's it. How did I forget? Too many stocks up here. Healwell AI is the little company. It's fascinating, and it's why I don't like going on anonymous comment boards. I don't go on CEO.ca. I don't go on, StockTwits or any of those. Every once in a while, like once a year, I'll go on like CEO.ca and just see what people are saying. But it's just, because literally on every time Well Health Technologies would release earnings, there would be fighting over how profitable Well Health Technologies actually was because of the share price of Healwell AI. And it's like, we all know that. We all know that. Like the company is not pretending that it's more profitable than it is because of share price of Healwell AI going up. Institutions know what's going on. Everybody knows what's going on. And it's just, it's very frustrating. And it is part of the reason why I started my own channel, so we could have slightly more professional type conversations about some of these stocks. Although some days Some days I'm a little less professional, right? I do try to give my opinions as much as I can, right? I've been riding URL since 17 cents. Congratulations, Jeremy. That's a huge winner, right? You're basically 10-bagger status here. So good work. Fantastic little company. PNGVs, that's Kraken Robotics, still room to grow. Yeah, I'm going to probably close it out here with Kraken Robotics, right? $4.60. Surprised me. I shouldn't say it surprised me, but this is one of those things where I sold too early myself. I just sold my last share of Kraken Robotics this week, basically today, because it's Monday. So I had 10% of my position remaining of Kraken Robotics, and I sold it here. And just because I want to put that money into some other positions, I sold some here. I sold some here, and now I sold some here, and I made some money on Kraken Robotics. And, you know, congratulations to them, right? This has been one of the more successful companies on my channel. I still like the company and love what they're doing and will watch them, but they're outside of my niche now. They're a $1.4 billion market cap company. They're largely driven by institutional investors. I can't really explain what's going on anymore. I mean, if you could tell me exactly why you think their share price went from 325 to 457 on very little news, it's mostly speculation around Anduril. You know, $1.4 billion market cap on what are they right now? What's their trailing 12-month revenue? $90 million. $1.4 billion market cap on a $90 million trailing 12-month revenue company with 16% growth. So yeah, I sold my last 10% of Kraken Robotics. So I'm out. But congratulations, super successful. Look at that. This is, you know, you look at timing. This is when I introduced Kraken Robotics down here. And believe it or not, this was even a win here. This was a double. It went from, you know, less than 30 cents to 65 cents. And then here, you know, went 95 cents a dollar in 2024. So there was the 1 year where people just about gave up on Kraken Robotics. I made a video here, and I think this first year they were only up 12%. They were one of the worst producing stocks on my channel, up 12%, and some people gave up, and now they went from, you know, up 12% to this. So congratulations to Kraken Robotics, and on that, I am going to shut down this live stream. Really appreciate it. Again, thank you for watching. Thank you for your time. You could be anywhere, and you're here talking about microcap stocks of all things with me. So good luck. It looks like the market's turning a little bit. I hope that the bottom for microcap stocks was around the week of September 8th. That was a pretty bad week. Now we've got all these investing conferences coming up. I will be at Planet Microcap Conference in Vancouver, September 29th in person. Hopefully all these investor conferences, microcap investors are going to start deploying their money. So it'll be nice to see a good October in microcap stocks. That's what I'm hoping for. And then we could start talking about tax season and where we're going to go from there. But yeah, I just wanted to show you some of the changes to my channel, some of the stocks I'm looking at, and go through that little text there from Paul Andreola and some of the opportunities that were discussed. So thank you, and I will see you again in a week.